Good evening, everyone. Speaking on behalf of Macrotech Developers Limited, I'm Lalit Jaising from Concept PR and your moderator for this virtual brokers and analyst event. I would take this opportunity to thank you for taking your time from your busy schedules to join us. We appreciate your presence and extend a very warm welcome to all of you. The objective of today's live session is to understand Macrotech developers' interest in raising finance via an initial public offering and what they do as a business organization. Under a normal circumstance, this would have been an on-ground event, but we all are increasingly getting accustomed to this as a safer and more convenient format of attending and conducting the roadshow. We hope you gather the same or a better experience from the comfort of your home and office. Before I review the functionality of the webinar, I would like to bring to light that the company stands to be one of the largest real estate developers when it comes to residential sales. 3+ decades of experience, around 91 projects across Mumbai's metropolitan region and Pune. It has had an increasing focus on mid-income and affordable housing and mixed-use developments. Earlier a pure play into residential segment, it is now forayed into the development of logistics and industrial parks too. Some of the brands we recognize and have heard of are Casa by Lodha, Crown, Lodha Quality Homes, Lodha Luxury within the residential segment, and Lodha Excelis, I think Lodha Supremus in the commercial segment. One must know that affordable and mid-income housing accounts for 57% of its total residential sales, and the company looks to constantly innovate and be sustainable in its design and operations. Moving ahead. You'll be kept on mute throughout the event. All questions will be answered via the Q&A chat box only, where you can type in your question in session or at the end of the webinar. Would request all participants to please limit yourselves to 3 questions if possible and use a lowercase font when typing the question. If we miss answering any of your questions, don't worry. You can email us at ipot@conceptpr.com and we will try to be swift in responding back to you. Going forward, it's a great pleasure to introduce our speakers today. From the company, we have Mr. Abhishek Mangal Prabhat Lodha, Managing Director and CEO, Mr. Sushil Kumar Modi, the Chief Financial Officer. The representation of the book running lead managers are Mr. Nitin Nidani, Executive Director, Axis Capital Limited, Mr. Varun Bail, Executive Director, JP Morgan India Private Limited, Mr. Jayashankar Venkatraman, Senior Executive Director and Head of Equities, Kotak Mahindra Capital Company Limited. On behalf of the company and lead managers to the issue, let me thank all participants for being a part of this session. I now invite Mr. Nitin Idani from Axis Capital to deliver the opening remark and commence this brokers and analyst conference.
Thank you, and good afternoon, evening, ladies and gentlemen. This is a day we've been looking forward to for a while now. Every once in a while, a very different company comes along that changes the game for all the players. And Axis Capital has been very, very fortunate. It's been able to bring such companies to the market. Macrotech Developers is clearly one of those. It is with great pride today that on behalf of Axis Capital and our fellow bankers, JP Morgan and Kotak, I warmly welcome you all to the virtual press conference and launch of Macrotech Developers Limited IPO. One of the primary entrants in the real estate industry back in 1986, the Lodha Group has conquered countless obstacles to consistently establish itself as the largest real estate developer in India today. Shining bright, they have been bestowed with a multitude of prestigious awards in the industry. Let's put our hands together for the A team, which has made Macrotech Developers grow from strength to strength. The man wearing multiple hats needs no introduction, promoter, managing director, and CEO, Mr. Abhishek Lodha. And with him, a wizard with numbers, the Chief Financial Officer, Mr. Sushil Modi. We are all very well acquainted with their exemplary execution capabilities, with world-class constructions such as World Towers, Lodha Altamount, Lodha Park, New Cuff Parade, or Palava surrounding us. Their work really does speak for themselves. We are all rooting for the substantial growth awaiting Lodha Macrotech, with strong arguments in their favor due to the industry tailwinds in the MMR region, a well-diversified portfolio focusing on all segments and all aspects of real estate. We wish them really the very best in the years to come. Just about the IPO, the total IPO size is 2,500 crores, comprising of 100% primary capital. The price band is about 483 rupees to 486 rupees per equity share. The issue will open to the public on Wednesday, the 7th of April 2021, and close on Friday, the 9th of April 2021, with the anchor scheduled on Tuesday, the 6th of April 2021. We have received a strong interest from marquee investors across the globe in spite of tumultuous capital markets, which is a testimony to their conviction in the company built over the years. Without further ado, I now request the management team to take us through their momentous journey and share with us their future growth strategies. Over
Thank
to you,
you.
gentlemen.
Thank you, Mr. Dani, for the introduction to Macrotech Developers' initial public offering and the issue key highlights. Let's now get hearing from the management and the leadership team. I would now request Mr. Abhishek Lodha and Mr. Sushil Modi to take us through the organization's journey, struggles, victories, subsequently take the attendees through the company's investor presentation to cover its business and financial details, as well as touch upon its key strategies going forward. Over to you, Abhishek.
Thank you, Lalit and Nitin, and thank you to everyone joining us today. I hope you and all family members are well. We are thankful to you for the time that you've taken out from your busy schedule, and look forward to a good engagement with all of you. We'll take you through a presentation, and then at the end of the presentation, we will have the opportunity for discussion through Q&A. So getting started now. And if we move forward, the highlights of the issue have already been covered by Nitin, and with our bankers, Axis, JP Morgan, and Kotak, supported by the BRLMs, ICICI Securities, Edelweiss, IIFL, JM, Yes Bank, SBI, and Bob Capital. We look forward to the launch of the issue on the 7th of April. Moving forward and talking a little bit more about the industry and the company, if I can request the concept team to move forward. Thank you. So prior to COVID, the housing market in India was in a stagnant position with prices moving sideways or even downwards, even though volumes were going up. This was largely on account of the oversupply, which was fed by the credit from the NBFCs. Between 2015 and 2019, a huge amount of excess credit went into the sector, resulting in oversupply and consequently the pricing behavior that we saw. However, once the IL&FS and NBFC crisis took place in early 2019, this surplus credit dried up. And over the last 12, 18, 24 months, all that excess supply with tier 2 developers has been taken out of the market. And the market is in a much healthier place today with a balance of supply and demand, which is indicative of a robust long-term growth in the industry. We believe that the housing industry is at the cusp of a long-term structural upcycle, which will be seeing good balance between supply and demand, modest growth in prices, and significant increase in volumes on the back of great affordability, which we will talk about in a little bit. So that's where really we think the direction of the housing market is headed. Within housing, the Mumbai region, MMR as it is called, is by far the largest market in India with almost 1 lakh crore of annual sales. And MMR also brings in about 40 to 50% of the overall profits in this market, in the housing industry. Therefore, if you're bullish on housing in India, then MMR has to play a key part of your portfolio. And within MMR, Lodha is by far the largest player, 4 to 5 times bigger than any other player in Mumbai. And just being focused on Mumbai and Pune, Lodha has been amongst India's largest resi developers for the last 7 consecutive years, with over 50,000 crores of sales in this period. We have a very consistent track record of sales, collections, profits, and deliveries. And this is in large part on account of our strong professional leadership team, most of us in our early to mid 40s, very operationally hands-on, and very excited by the strong growth opportunity that we see ahead of us. We are well supported by a robust mid-management team, good internal controls and processes, and strong IT systems. We have as a company grown from 40 crores of pre-sales in 2003 to an average of 7,500 crores over the last 3 fiscal years, which is a growth of 180 times in 18 years. That is the kind of growth this company is capable of, And that is why we believe that we are the most aptly positioned platform to take advantage of the huge volume growth, which is likely to happen, especially in the affordable and mid-income segments in Indian housing over the next few years. Obviously, the timing could not have been better. While the demand is getting strong and we'll talk about it, and supply is getting controlled and consolidated, we also have to take into account the fact that the government's policies towards the sector are getting increasingly supportive. Over the last 3 years, the government has come out with a number of positive policies, whether it is the subsidy for affordable housing buyers, the tax holiday for affordable housing developers, the stamp duty reductions, and so on. And we believe that these positive policies will continue in the future also, because housing and infrastructure are the two sectors which the government realizes are going to drive employment creation in our country for the next 2 decades. And just like agriculture has gotten supportive policies in the past few decades, these two sectors of housing and infra will also get these positive and supportive policies. And obviously, the role of housing is not only limited to employment creation, but also to wealth generation, because the middle class, when housing prices go up modestly, not too fast, but at the same time going up modestly, it results in a significant amount of wealth creation for the middle class. And that is going to be the fuel for India's journey from being a low-income economy to becoming a mid-income economy. Moving forward and talking a little bit more on the demand side, if we can move forward, please. Concept team. Next. On the right hand side, you see affordability at 3.3x. This is not only the best affordability that India has ever seen, but probably one of the best in the world. And when you combine it with the fact that wage growth in India will be between 6 to 8% over the next decade, you can easily see how you can have housing price growth of 5 to 6%, and yet affordability remains at these attractive levels or even gets better. And that in turn will unleash a huge growth in volumes. Talking about volumes, the fact is today, the size of the Indian housing industry is much smaller than its potential. The top 8 Indian cities are only selling about 300,000, 3 lakh housing units each year. When you contrast that with global peers, the US, with 1/4 of India's population, home ownership rate of 65% already, India is only in the mid-20s, yet it is selling 10 lakh new homes every year. The UK, with 1/20th of India's population, is itself selling 3 lakh homes each year. And China, of course, is doing almost 1 crore homes each year. We can't even compare. In India, if you look at it from the other angle, our demographics, our family nuclearization trend, and the fact that 15 lakh graduates are coming out of our tier 1 and tier 2 institutes every year. They follow the same process, going to one of the top 8 cities, getting a job, first renting a home, after a few years buying their first home, a starter home, and thereafter slowly upgrading over life. So it's very clear that the potential for housing sales in the top 8 cities is much bigger than the current number. And as a company, we firmly believe that that number will rise to at least 1 million new home sales in the top 8 cities, 10 lakh new homes in the top 8 cities in the course of the next 7-8 years. This tripling of volume from the current level of 3 lakh homes is going to be a huge boost to both employment as well as wealth creation in our country. And equally, it is going to be focused in the affordable and mid-income housing segment, and players who know how to be profitable and scalable in that segment are going to be the biggest beneficiaries of this growth in volume. Talking further on the graph on the top and the bottom left of the page, you can see that home loan rates are at their lowest in a long time. And more importantly, the gap between home loan rates and the rental yield is becoming increasingly narrower. With the positive tax treatment for home loans, there is a very clear reason why people want to buy. And last but not the least, COVID has clearly crystallized the demand. People have realized, being locked into their home for a few months, how important it is to have a bigger home or a better quality home. And that is combined with the fact that for the last 6-7 years prior to COVID, Indians were severely underbought in housing because they were told that housing prices will keep falling. Now that era of home prices falling is gone because supply is a lot lesser than it used to be. And in that context, people have come out in very, very large numbers to buy. Last 2 quarters have been record quarters, not just for us, but for a large number of good companies. And we believe that this is just the start, and the momentum in housing will continue to take this industry forward because the supply takes quite a long while to catch up. Moving forward and talking about supply. Next slide, please. The graph on the top left, I think, tells most of the story. You would see that 40 to 50,000 crores of incremental credit was going each year into the housing sector, largely due to the NBFCs and certain other institutions. After the NBFC crisis, that number has significantly fallen down to just 5,000 crores in FY20. And today, very few developers like us can get access to new credit. The tier 2 developers have absolutely no access to new credit. And then when you combine it with the fact that after the implementation of RERA, tier 2 developers have not been able to sell under construction because consumers are very wary of buying from them under construction, having been burned with many, many projects which were stuck midway. So today the supply from tier 2 developers is not viable because it neither can get credit nor does it have cash flow from customers while under construction. And therefore the supply is now increasingly consolidated amongst the top players in every city, the top 3 to 5 players in every city. This consolidation is very healthy for the industry because it will mean much more disciplined supply and quite likely that the supply will be far more profitable than it has been in the past few years. Moving forward and talking a little bit more about our company. Next slide, please. The image that you see is of the World Towers in central Mumbai. As an Indian, I'm very proud of this photograph because it would do justice on the skyline of any great city in the world. And while this project has had its shares of ups and downs, it has generated very good profitability for us, which underlines the strength of our business model. More importantly, from a consumer perspective, this is now recognized as the top city center location to live in, not just in India, but across Asia. And that's why you have the who's who of corporate India living over here. And it's not just about the World Towers. Across locations, people know that Lodha delivers the best product. And if there is a Lodha project within the geography that one wants to live in, then people definitely prefer buying from Lodha. And that is the reason why we have the kind of sales leadership that I'll just talk about. Next slide, please. You'll see on the left-hand side, over the last 7 years, we've done 50,000 crores. Yes, that's correct. 50,000 crores of sales, whereas the next largest player has done about 28,500. So we are almost 2x there. And our capacity to take land, convert it to sales, and take the sales and convert it to cash flow is streets ahead of anybody else in the business. Our collections in this period are even higher than the number of 50,000 crores of sales, and that is extremely rare to have a ratio of collections to sale which is more than 100%. The reason we are so good at this churn, this ability to take land, convert to sales, and take sales and convert to cash, is on account of our focus on operational excellence. We are one of the only engineering-led and engineering-focused real estate developers in the country. Out of our 2,700 people, almost 1,300 are solely focused on operational excellence, whether it's design, sustainability, health and safety, value engineering, risk mitigation, procurement, or construction management. We have the best-in-class people and IT systems, which allows us to operate at a pace and produce at a cost which is far ahead of competition. You will notice on the right-hand side graph that we've delivered 5.7 crore square feet in the last 7 years, and this is largely residential in Mumbai, which is both Resi as well as Mumbai are difficult to deliver in. And the other Mumbai-focused player, Oberoi, has delivered 50 lakh square feet in the same period, which is a 10x difference. Equally importantly, our construction costs tend to be significantly lower than the competition, and on a like-to-like basis, on account of our better engineering skills and design, on account of our in-house nature of construction and larger purchasing power, we are able to significantly produce at a lower cost than competition, and that makes our profitability in affordable and mid-income housing far more resilient, and that is a source of significant strength for us. Moving forward, our focus on affordable and mid-income housing. Next slide, please. You'll see in the top bar, the horizontal bar, our mix of supply, and the second bar, horizontal bar, is our mix of sales. You will notice that 56% of our current supply and 62% of our current sales are coming from affordable and mid-income housing. Affordable is the blue part of the bar, and the orange part of the bar is mid-income. And this will only increase in the years to come. Combined with the fact that we know how to be very profitable in affordable and mid-income housing, and the demand for affordable and mid-income housing is set to grow exponentially, you can understand how our business model will not only generate top line growth, but also significant bottom line growth in the years to come. Moving forward, uh, our residential business is quite excitingly poised to grow on a combination of our own lands plus through joint developments. We currently have most of our sales coming from 3 of the 7 micro markets in MMR, which is South Central Mumbai, Thane, and extended eastern suburbs. On this page, they are marked with the yellow circle with one written inside it. However, in the other 4 micro markets of Mumbai, which is western suburbs, extended western suburbs, eastern suburbs, and Navi Mumbai, which are totaling about 50,000 crores of annual sales, and the 3 micro markets of Pune, which is another 20,000 crores of annual sales, so totaling 70,000 crores of annual sales, our current presence is limited. With our growth strategy over the next 3 years, with a combination of JDAs and an outright purchase of land, while we are very focused on deleveraging, we feel very confident that we will be able to significantly grow our market share across all the micro markets of MMR and Pune, where we are currently underrepresented in. And just like we have between 20 to 35% market share in the 3 micro markets where we have a lot of presence, we expect to gain very substantial market share in these other markets worth 70,000 crores. And therefore, we can see very clear growth ahead of us in the next 3 years by solely focusing on Mumbai and Pune for our residential business. And that is a low risk strategy because in these 2 places, our brand is established, our operational excellence is and capability is clear. And therefore, we feel quite strongly that we can grow in a low risk manner over the next 3 years by focusing on Mumbai and Pune. Moving forward and talking about the other growth part of our business. Next slide, please. The photograph that you see is of our first industrial park, which is located in Palava, and this is a joint venture with ESR, which is Asia's largest logistics company, and it is listed on the Hong Kong Stock Exchange. In our industrial parks, there are all kinds of land-intensive developments happening, including manufacturing units, warehousing and logistics, cold storage, and data centers. And moving forward, next slide. We have currently earmarked a large part of our land for utilization through these industrial parks, both in Palava and Upper Thane. You may have read that last week, Bati Logistics, which is a large French logistics company, bought 30 acres of land from us for 106 crores, which is an average of little over 3.5 crores per acre. And with that purchase, as well as other sales to large corporates and these joint ventures with the likes of ESR and Morgan Stanley, we are seeing very good demand for industrial parks in these 2 locations, which is building the infrastructure for Atmanirbhar Bharat and also helping us monetize our land in a very rapid and timely manner over the next few years, which allows us to grow not just in residential, but also generate significant free cash by focusing on this industrial parks vertical, which we intend to do. The third and last part, on this slide also, I would like to point out about the large number of infrastructure projects which are happening around Palava and Upper Thane. Palava is located about 60 minutes from JNPT, which is India's largest port. It will be about 30 minutes from the Navi Mumbai International Airport when it opens in 3-4 years' time. And the Trans-Harbour Link, which is scheduled to open late next year, will reduce the travel time from Palava to South Mumbai down to about 60 minutes. The big game changer will, of course, be the metro line, the Kalyan Taloja metro line, which will again be operational in the next few years, will be a big boost to demand in Palava city. Palava is also benefiting from a number of other road projects in its vicinity. Similarly, Upper Thane is benefiting from a large number of metro and road projects, and one of the road projects will make the distance from Upper Thane to Dombivli West Station just down to 7 minutes and give great connectivity to Central Line, and that should complete in the very near term. So this great amount of infrastructure in this area is a huge boost to these locations. It will improve the demand both for residential, office, as well as industrial, and is likely to be a significant value enhancer for our organization. Moving forward to the next slide. We do a small amount of office and retail. Our general model is build, lease, and sell. We don't hold it onto our balance sheet. We do these projects as part of our larger mixed-use developments to add vibrancy to those developments and to help monetize the land faster. We currently have about 1,500 crore of ready assets, and historically we've been monetizing about 500 crores per annum of commercial assets, and we expect to continue doing that going forward. Moving forward, To the next slide and talking about our financial performance. Next slide, please. You will notice on the left hand side that we have collected on average about 8,500 crores per annum over the last 3 years prior to COVID, which were the most difficult period for real estate and the Indian economy. This level of collection is equal to the total collection of the next 3 to 5 players combined. And that showcases our strength of not only selling, but also building and collecting money. And this is the core reason why we have been able to significantly reduce our debt over the last 15 months between December 19 and March 21. In spite of losing 6 months due to COVID, we've reduced our debt by just under 2,000 crores. And we expect going forward that our debt will continue to reduce significantly as the business expands and our cash flows continue to come in. After the reopening after lockdown, sales performance has been extremely strong. In the 4 months between September and December, we did almost 3,000 crores of sales, and even this previous quarter has been exceedingly strong. We see very good visibility of sales on the ground. We see very good positive momentum, and as prices are rising, people are coming to buy homes in a bigger manner. We expect prices to rise at a pace which is just under wage growth, which will be positive for affordability because affordability will slightly keep improving. And it will also be a positive for buyers because when they buy early, they definitely get a price which is lower than future buyers. In terms of our profitability, our Ebitda margins are in the low 30s. Obviously, as we get bigger, we will get the benefits of operational leverage. And as we de-lever, on the PAT side, our current margins are 13 to 14%. That is much higher than the norm in the industry, which is really a testimony to our operational efficiency and our ability to churn. And we expect our PAT margins will benefit from the deleveraging that is expected to occur over the next few years. Talking about deleveraging and moving forward, to the next slide, please. As of December, the India business had 16,700 crores of debt that has further reduced in March. And after the capital raise and allied actions, the debt will be down to about 12,700 crores. We have a contingent liability of about 1,600 crores related to an investment in the UK, which is expected to be paid out from the UK over the next 12 to 15 months, and that will also come to an end separately. Against this debt of approximately 12,000 and odd crores, we have very, very significant amount of assets which will enable us to quickly run down this debt over the next 3 years. On the right hand side, you will note that we have about 55 lakh square feet of fully ready inventory with OC. We have an additional approximately 1.5 crore square feet of under construction area which is yet to be sold. The average completion duration is about 18 months on that. And we have receivables of about 5,000 crores from units that are already sold. Item number 3, we also have land which the government has acquired from us and needs to pay us, which will be paid over the near term. The industrial parks that I referred to earlier, and you saw how Bharti Logistics bought land from us at 3.5 crore rupees an acre plus, and therefore that industrial parks monetization is going to generate significant free cash flow for us over the next few years. In terms of commercial assets, we have 1,500 crores of commercial assets which we expect to sell over the near term, and obviously more will come along the way. In the UK, it was a strategic mistake we made. We are very clear that we are an Indian real estate developer. We will only do real estate development in India. Be as it may, the UK assets have completed. The construction is over. Large part of the sales and cash receipts have happened. And the full UK wind down will happen in the course of the next couple of years. And in addition to the repayment of the bond, which is the contingent liability of $2 to $5 million or 1,600 crores in Indian rupees, we will also receive another 1,500 to 2,000 crore rupees in due course from the UK. I will end this presentation with something which is very important for me personally and to our company, which is our focus on being an industry leader in governance and sustainability. Next slide, please. You will notice our board is a very high-powered board. They are very operationally hands-on. They focus on both governance as well as operational issues and meet frequently. Our chairman is Mr. Mukund Chitle. He is an independent director. He sits on the board of L&T. He is the former chairman of the Institute of Chartered Accountants of India and former president of the Ethics Committee of the Bombay Stock Exchange. Mr. Rajinder Pal Singh, he sits on the board of Maruti Suzuki. He's a former chairman of Punjab and Sindh Bank and former chairman of the National Highway Authority of India. Mr. Ashwini Kumar, He's former chairman of Dena Bank and former director of LIC, Life Insurance Corporation. We also have 3 whole-time directors, myself, Ms. Ronika Malhotra, who focuses on brand and marketing, and Mr. Rajendra Lodha, who focuses on land. As a board, we have put together a number of policies to make our governance world-class, and we strongly believe that we are headed to become to continually improve in this area and set a very high benchmark on governance. In the field of sustainability, this is an area of great interest and focus for our company. Not only do we take the normal LEED ratings of gold and platinum for our commercial buildings, but we also focus on walking the talk in many other ways, including 100% wastewater recycling at all our projects, separation of garbage at source to ensure effective recycling, usage of large quantums of renewable power, and usage of air conditioners which are low or no CFC emissions. We are working with various international organizations to set out our path to becoming a net zero carbon emitting company over the next 10 to 15 years, which will make us a global leader in the field of sustainability in real estate. In terms of social impact, our organization works through the Lodha Foundation in all the communities that we operate in. The Lodha Foundation has various initiatives, including low-cost schools, scholarships, technical training, to ensure that one member of every family is employable and enables the family to come out of the clutches of poverty. In terms of diversity, we are an equal opportunity employer, hiring irrespective of background. However, we have a specific focus on gender diversity. We've had a female board member for many years. 3 out of our top 10 leaders are female, and 25% and growing of our workforce is female. In summary, the ethos of our company is do good and do well. And we firmly believe that the big opportunity ahead of us is not only to do well by growing a lot and delivering great financial returns, but also doing good to the communities and the environment in the manner that we work. Thank you.
Thank you, Mr. Lodha and Mr. Modi, for taking us through the presentation. MMR, having high entry barriers, continue to be the most attractive real estate market and has the largest share of supply and absorption. There is a significant depth of demand from real estate across various price points, with 36 ongoing projects and 18 in the planning, creating a developable area of 73 million square feet. The organization is definitely getting the cityscape to international standards. We hope the attendees have captured enough and more understanding of Macrotech Developers' business model, its financials, and the residential and commercial real estate portfolio. Before the floor is open to the participants to ask their questions, I would like you to please type in your name and organization's details in the Q&A chat box for the moderator to take note and address your query. Note, in the interest of time, we will be restricting to 20 to 25 questions only. Repetitive questions will be skipped. So there's a question which asks to give some details about the inventory of close to 30,000 crores in terms of finished inventory, work in progress, and land value. Could you please throw some light there?
Sure. So we currently have 5.5 million square feet of ready inventory, of which 3.3 million square feet is affordable and mid-income, and 2.2 million square feet is premium and luxury. The average price points can be estimated from the sales values of our affordable and mid-income projects in Palava and Thane, and similarly for our premium projects in central Mumbai. In terms of ongoing, out of 14.7 million square feet, 13.2 million square feet is affordable and mid-income, and 1.6 million square feet is premium and luxury. Out of our planned projects of 37.5 million square feet, 35.5 million square feet is affordable and mid-income, and 2 million square feet is premium and luxury. In terms of our commercial developments, we have ready about 1.5 million square feet, ongoing under construction about 2.15 million square feet, and planned another 7 million square feet. In terms of industrial parks, we have ongoing about 290 acres and an additional planned of 540 acres, totaling to 830 acres. Besides this, we have about 3,800 acres of land bank, which is in addition to the numbers that I just spoke about. And then from the UK, we expect to receive, after the paying of the contingent liability, about 1,500 to 2,000 crores. These details are available largely on pages 148 through 153 for the residential segment, and on pages 157 and 158 for the other parts of our business.
So a question to be answered by the CFO. What was your revenue for FY21 and what is the revenue as per Ind AS? Kindly explain the discrepancy there.
So the revenue under the Ind AS is being recognized only on the completion of the project. Till then, the sales that keep happening on a daily basis, that doesn't get accounted as revenue into the P&L. As and when the project gets completed, the entire sales over the period attributable to that project get recognized in one shot, and that is why you all will find that the sales number and the revenue number will never tally, because the sales is what we effectively sales day in day out. So, and which is the lead indicator effectively to indicate the performance of the company, while the revenue comes in bulk as and when the project gets completed.
Okay, so what is the total net debt in the company, which is debt minus the cash on books?
The net debt of the company as of 31st December was 16,700 crores. There has been a further reduction in that debt in the subsequent quarter. And we expect to be at about 12,700 crores or thereabouts after the IPO and its allied actions.
Obviously, this does not take into account the debt as on 31st December, another piece of 1,600 crore on account of the UK assets, as Abhishek pointed out earlier, for which the guarantee has been given and henceforth is a contingent liability for the India balance sheet. But obviously, that gets paid out from the UK cash flow going forward.
Okay, so there's a question which asks that what will be the interest saving post the IPO and how and when you will reduce further debt on your balance sheet.
So I think the proceed that we raise, be it IPO proceeds as well as the allied activities, which we are expecting the fund to come in, as we all you all know, as the money comes in and gets paid out towards the repayment of these outstanding debt, automatically, needless to say, the interest that is being paid today on such debt will come to a stop. So to that extent, it saves the interest cost in the coming years gets saved on the entire such inflows that we will be having. Beyond that, and besides that, as the company generates cash flow on a daily basis, as we sell and collect literally on a daily, it is as good as an FMCG company which sells its product on a daily basis and collects money. So to that extent, every month we effectively reduce our debt. So to that extent, our debt, you all can appreciate and equate against our sales trajectory, that sales and collection trajectory that we have showcased over last 3 years, a collection of around 8,500 crore, thereby meaning a substantial free operating cash flow will be available to reduce further debt going forward, and henceforth to that extent that will throw substantial saving of the interest cost just on account of continuous repayment of the debt. And then on the top, as the equity gets raised, obviously needless to say, the company goes for a re-rating from a credit rating agencies, and which will also reduce down its cost of debt substantially, and thereby there will be a huge saving in terms of the interest cost going forward.
So could you throw some light on where the monies to be received in the net proceeds is going to be used?
So yeah, the 2,500 crore IPO proceeds that we are raising, we have kept 375 crore for our growth capex. Beyond that, 1,500 crore goes for repayment of debt, and the rest is for the general corporate purpose, which obviously, as you all would understand, is a fungible money. So to that extent, it will be available for day in, day out, and as well as for the repayment of debt.
So from the business strategy point of view, all ongoing projects of Lodha is on own land. Is this going to be your business model going forward too?
We have, as a company, followed a mixed business development strategy on the land side. We have done JDAs in the past. Those projects are now complete. We currently are doing projects mostly on owned lands, We expect going forward to do both JDAs as well as own lands. We find very attractive opportunities in JDAs at the current time because of the stress in the tier 2 developers, and because of our scale in Mumbai, everybody would first like to associate with their project with Lodha. And therefore, we feel that going forward, we will have a combination of JDAs as well as owned land in terms of our growth strategy.
In percentage terms, sir, what is the proportion of affordable home sales out of the total sales, and what are the margins in the affordable home sales space?
In our currently for the 9 months ending December 20, 62% of our sales came from affordable and mid income. Out of that, 39% was affordable, and the balance 23% was mid income. So 62% was coming from that category. In terms of our margins, as we had mentioned earlier, our cumulative Ebitda margins are approximately in the low 30s, and the affordable segment tends to have higher margins than the premium segment. So you can extrapolate that the margins in affordable will have a Ebitda higher than that low 30s number.
So how much is the London and outside India business as a percentage to the total business?
We as a company, as I mentioned earlier, are no longer interested in doing anything outside India. The London projects have been completed physically. The construction is over. The project management is handled separately. MDL is not focused on the management of those projects. And we are now only waiting for the return of some of our investment monies, which I mentioned earlier. First will be the repayment of the 1,600 crores bond liability from the UK cash flows, which should happen over the near term. And thereafter, there will be a repatriation of capital to India, which will be in the range of 1,500 to 2,000 crores. Going forward, it is a purely India-focused business with largely a focus on affordable and mid-income housing and a growing focus on industrial development.
So thereby we request all of you to look at UK business as more as an investment, and thereby the realization that the company will be expecting going forward towards its investment that was made in the earlier years.
Okay, so what is the kind of Ebitda margin that you incur from Mumbai Central, Thane, Palava, and Upper Thane?
The Ebitda margin that we have across the blend of the projects is in the low 30% range. And the affordable and mid-income projects tend to have higher margins than the premium housing segment because they tend to be low rise in construction. The land is cheaper, and we also, because of faster churn, have lower overhead costs. So while the norm is in the low 30s, the affordable and mid-income projects have higher margin. The premium projects have therefore something lower than that average of low 30s.
So what is your ticket size of your residential units right now? What is the percentage of, as you've just highlighted, affordable housing as a percentage of the total portfolio? And what will be the percentage going forward? Can you name a few of the completed affordable housing projects that you have executed?
We have been focused on affordable and mid-income housing for a long time. We have multiple locations where we have done affordable and mid-income housing. We have locations in Thane, which is Lodha Paradise, Lodha Luxuria Priva. We have Casa Grande and several other such projects in the Thane area, Lodha Splendora, and so on. We have projects in Mira Road. We have done projects in the western suburbs. We have ongoing projects in Andheri and Jogeshwari in that segment, as well as in Mira Road. We have otherwise done projects in Kanjurmarg, which are all in the affordable and mid-income segment, in addition to Palava, which is a very large new city development, which again focuses on affordable and mid-income housing. As well, and Upper Thane, another large development focused on affordable and mid-income housing, and Lodha Belmondo, which is located on the Pavna River between Lonavala and Pune, which is again focused on mid-income housing. So these are the projects that we have done in that segment. In terms of our contribution to sales, I have mentioned earlier, but I'll repeat, 62% of our sales are currently coming from affordable and mid-income housing. That's the last 9 months up to December 20. And out of that, 39 is affordable and 23 is mid-income. We expect that proportion to rise meaningfully over the next few years.
So what is the cost of capital to the company? Also, as you've stated that, the cost of your cost of construction is, lower than peers. In terms of numbers, what will be their average cost of construction per square feet?
So our cost of capital is just under 12% as of now, and I would request you all to just take note of the fact that what you see the interest cost into the RHP, that has a consolidated cost number of UK business as well, and henceforth that should be taken out while looking at the interest cost pertaining to our India business, and which is why we have given you given in the document all the entire details around the various important metrics around the India business, including revenue, EBITDA, PAT, whereby you can look at the interest number also for the India business.
Sir, what is your current inventory as on date for your UK project, and if there is any construction cost to be incurred in those two projects then?
The UK investments are complete in terms of construction, so everything is complete. The value of the inventory in one project is about 125 million pounds, and the other project is about 650 million pounds. In these two projects combined, we have already received just under 700 million pounds from the units already sold, completed, and handed over to the purchasers.
Okay, so there's a question which asks, do you do any slum rehab or redevelopment projects?
We do not do slum rehab projects. We are not in the slum redevelopment business. In one occasion, we have taken on a project where the slum rehab was handled by the landowner, and we just did the free sale FSI. But generally, we don't do slum rehab projects. In terms of redevelopment projects, we do very limited redevelopment projects, largely in the more expensive parts of town where we had acquired land earlier. But again, it's a very small part. Our general business model is to take clear title land and do focus on large volumes of construction, which is done in very, very quick time frames. And as I was asked earlier, at a lower cost of construction than our competitors, almost 15 to 20% lower than competitors. That is really the focus of our business model. So we are a scale operator. We don't do these kind of we don't like doing too much of these slow burn, long gestation projects. And we have learned from our past mistakes, and our focus very much is on affordable and mid-income housing.
So what has your profitability per square feet for affordable mid-income segment in the past 3 years been?
I think our PAT numbers are available in the document, where in FY20 our India business has a PAT of around 1,200 crore. And before that, and obviously, as you all know, that FY20 got impacted for 1.5 months on account of COVID. Similarly, in FY19 and 18, our India business had a PAT of around 1,700 crores. So, per square feet, you can convert as the sales numbers and all are there in terms of the square footages as well.
So, what is the business plan for the industrial and logistic park business? Is there any further land acquisition envisaged?
No, at this time we are focused on the industrial and logistics park in Palava and Upper Thane, where we already have a substantial amount of land available. We are focused on that monetization for the next couple of years and building up our skills and execution capability. Going forward, after the two couple of years, we will review whether we would like to expand to other locations. Potentially, yes, we would like to expand to other locations in a capital light manner, but that is at least a couple of years out.
Okay, sir. There's a question which asks, are you planning to raise any further debt looking at the current sustained demand?
No, we are very much focused on deleveraging and reducing our debt, because as Sushil mentioned, not only are we raising this equity and there are some allied actions which will further reduce debt, but our business is throwing off substantial operating cash flows which continuously are available for reduction of debt. So we therefore have no plans of increasing to our debt, though obviously we will recycle debt for lower cost of debt.
So with the stamp duty back at 5%, what is the initial traction you are seeing across your projects in the first week of April compared to December and March quarters?
We have not seen anything which has changed. Obviously, we've had only one weekend, which is yesterday. there has been no meaningful change per se in what is happening on the ground. We believe that, as you see, some of the other peers who are not in Maharashtra report their numbers. I know today Ashiana Housing reported numbers where they showed sales which were almost double of last March 20 quarter versus March 21 quarter, which shows that the housing demand is very real, and it is driven by factors like much more balance of supply and demand and modestly rising prices, along with the need for people to have better homes. Stamp duty cut was definitely beneficial, but it is not the key driver of sales. Even now, for women buyers, there is a 1% rebate in stamp duty. And also in our projects in Upper Thane and Palava, only 50% stamp duty is charged because they are under the integrated township scheme. So generally, stamp duty is something which anyway we have some projects which have special benefits, and in other places we will have this reduced stamp duty for women buyers. But we are not too fussed about the fact that stamp duty has gone back to normal. It was expected to go back to normal. And we believe that the government will continue to incentivize the sector in one form or the other because of the positive contribution of this sector to economic growth as well as employment creation.
So, what is the current selling price you have in MMR, and you can highlight it across mid-income, affordable, and the luxury projects that you have?
For the year ending March 20, our average selling price was 10,631 rupees a square foot, and for the 9-month period ending December 2020, that amount was 10,156. So just over 10,000 rupees a square foot. The split between mid-income versus premium is not stated in the RHP, and hence I will not be able to comment on it, but it is fairly common knowledge what the rates are in Palava and Upper Thane and Thane versus what the rates are in Central Mumbai.
So this has been your third attempt to go public. What has been your confidence, and why didn't the issue come out earlier?
We have filed and gotten SEBI approval on 2 occasions. One was way back in 2009 and the other was in 2018. In neither case did we intend to launch our IPO, or we did not file our RHP. We had taken the SEBI approval with a view that if the market conditions were to be conducive, we would go ahead with an issue, but we never reached that point. At this stage, we have gotten exceptional, and I will use that word again, exceptional response from the international institutional investors. Our anchor book is expected to be completed tomorrow, and that will be in the public domain late tomorrow evening. And you will see the kind of response we have received. And in that context, we are of the firm view that with the market in a much better situation, housing being a sector which is going to be very important to the Indian economy, and we as a player which has generated almost 2x more sales than anybody else in this country in the last 7 years, are very well poised to not only do a successful issue, but also to continue to take our business forward thereafter.
So you have incurred losses in the current 9 months while you were making profit in the earlier 3 years. Is this an aberration, or do you see this trend continuing given the ongoing pandemic and other macroeconomic factors?
I think we are all aware of the fact that FY 29 months is an absolute exception, and it is definitely an aberration. Our profitability is very clearly established in the 3 years prior to the pandemic, and we expect that same level or even higher level of profitability to be the norm going forward. We during the pandemic had 5 to 6 months of no income, no construction activity, and yet incurring all our overhead costs and interest costs. So the loss is very easily clear. But going forward, we expect to return to our pre-pandemic numbers.
Even there, in 9 months, there is we took a one-time hit of around 500 odd crore of a provision, one-time provision. So henceforth, net, if you take that out, that even in spite of the operating leverage against us because of the loss of sale during the lockdown, we still were positive.
Thank you, sir. There's a question which asks that, please help me, with respect to my calculations. Pre-money market cap is about 19,000 crores, and value on various pages as mentioned by you is somewhere around 41 to 42,000 crores. This means it's about 2.2. Is this correct? 2.2 times.
When you say
No, I think yeah. So pre-money number is ballpark circa is right, around 19,300 odd crore. Beyond that, obviously, we leave it to the intellectual wisdom of you all, because I know you all can do the right math as you are doing. I think you are on a right trajectory in terms of doing the math. But yes, you can work out basis the phenomenal asset base that we have, and all asset base visibility of converting into the cash flow in a near future. You all can make a very right calculation and thought process in terms of where it should be.
Thank you, sir. Thank you, everyone, for showing interest in knowing more about the company and its leadership and future potential. I would now like to call upon Mr. Varun Bell to make the closing speech before we end today's webinar.
Thank you, Lalit. On behalf of Macrotech Developers, as well as our fellow book runners, Kotak and Access Capital, we thank you for taking the time out for listening to the Macrotech story. We believe Macrotech represents a unique growth platform in the India real estate story. It's one of the largest developers in India by sales. It's run by a seasoned management team, which has seen and proven itself across multiple cycles. The sector itself, as Abhishek outlined, is witnessing multiple tailwinds, both on government policies as well as the interest rate regime that we are currently subject to. Just to summarize, the issue is 2,500 crore primary issuance. The issue opens for general public on April 7th and it closes on April 9th. The anchor books are scheduled to close tomorrow. And the price band for the issuance is between 483 to 486. We look forward to your success, to your support in making the Macrotech IPO a huge success. Thank you very much.
Thank you, Mr. Bell. Esteemed audience, we've now come to the end of the webinar. We look forward to your participation and support in making this IPO a great success. Wishing you all a great day and keep safe.
thank you.
Thank you.